Welcome to your Monday Mortgage Market Update. Last week was the best week for mortgage rates in all of 2024 and one of the best since rates started going up back in 2022. Guess what, folks? It may be time to refinance if you've purchased a house in the last 2 years. So what happened last week? Well, first, on Wednesday, in their normal press conference, Fed Chair Powell hinted at multiple interest rate cuts before the end of the year. This is the Fed funds rate, but again, this signals a potentially weakening economy that's gone past the level that they want it to slow down to. Then Friday was huge. There was jobs data, and that data was weaker than expected, much weaker really than expected. That's a big deal, and that caused the markets to have a major correction. The Fed's next meeting won't be until September, so we have really almost 2 full months of data to collect before the Fed decides to cut, not to cut, how much to cut. What about this week? Very quiet this week. In fact, nothing really coming out at all, and there's very few Fed speakers. So Thursday, the weekly jobless claims that are posted every Thursday, people will be paying a ton of attention to. And then next week, big week next week, PPI and CPI, which is the Fed's number one source for monitoring inflation, will be next week. So it'll be a volatile week this week, but probably not much going on in the way of news. So where are the rates? 30-year fix right now is at 6.4%. The 15-year has cracked the 6% number and is now at 5.89%. And the FHA 30-year is at 6.10%. These are according to Mortgage News Daily. Freddie Mac's rate survey that you're going to see later this week is not going to reflect this because there's a lag there, and so you won't see it. It won't look like this big rate drop, but it has happened. We are about to start calling our clients who financed homes in the last 2 years and talking to them about the possibility of refinancing. Now, here's where mortgage people earn their money. There's a delicate balance. Do we want to jump on the first available rate that makes sense and take a chance for rates to dip even lower? Or do we want to wait and try to get to the bottom of wherever the rates get? It's dangerous to time that market, and a lot of it is going to depend on your particular situation. So whatever you're thinking, before you make a decision, you really need to pick up the phone and call me. Let's talk about A, where you're at in your current mortgage needs. B, are there any big lifestyle changes you think that may be coming that could result in buying a new house and not keeping the one you're at? And C, and most importantly, what is the right time for you to move forward? Got questions? That's what I'm here for, Weber Mortgage. We are a family in the business of helping families.